It has been a busy year for activist investors. Parkland Fuel is the latest example of this. In mid-March, activist investor Engine Capital sent a letter to gas station and convenience store retailer Parkland's board of directors. They raised concerns that the company has significantly underperformed competitors. They're pushing the company to consider the sale of non-core assets, calling for a refresh of their board of directors and an improvement to the company's compensation framework. After little progress and a follow-up letter from Engine Capital stating that they plan to withhold all their support for directors seeking re-election, Parkland did respond with a statement saying, "We will continue to constructively engage with all shareholders, including Engine Capital, in the weeks and months ahead." Now, it's worth noting that in March, Parkland's relationship with Simpson Oil was further solidified, with Simpson, which owns about 19% of the shares outstanding, getting a say on 2 board seats. As part of that announcement, Parkland also acknowledged that they are examining opportunities for dispositions where it creates strong returns for the company's shareholders, so possibly acquiescing to some of Engine's concerns. Let's bring in Arnaud Ajdler. He is managing member at Engine Capital. Arnaud, thank you so much for joining us today to lay out your perspective. You mentioned that you've been an investor in this space through CST as well as Casey's. Just give us some insight and backstory into why you took a position in Parkland in the first place. Was it because you liked the industry, or did you think it was ripe for change right away?
Well, thank you for having me. Look, we like the space generally. The convenience retail space is typically a stable business, highly cash flow generative. And as such, typically companies in the space trades at a relatively high multiple. Parkland is an exception because, in our view, the complexity of the business, instead of the other companies in the space, Parkland also owns a refinery. They own a number of commercial assets. And we believe that that's the reason why the stock is trading at much lower multiple than the peers, and that's a significant discount to intrinsic value.
Now, having said that, and I mentioned this in March, coinciding with the time of your agitation, the company did say that they were open to some dispositions. Does that give you comfort that they're moving in the right direction?
No, look, when we finally see some announcements, then we will feel the company is moving in the right direction. Right now, these are just statements. And, I think, one of the issues that we bring up in our last letter, which I think is somewhat symptomatic of the culture and the sense of urgency at the company, is the fact that they renominated for the next term for another year at the company, the chairman, Jim Pendelidis, who has been on the board for 24 years already. And it's particularly striking because the company is just established, actually this year, it's in the 2023 information circular. The company says that they adopted a 10-year policy. So directors at Parkland cannot stay more than 10 years on the board. And that applies to everyone, but to the chairman, who has now been on the board for 24 years. In the circular, it says actually that the chairman intends to stay until 2026. So while for all the directors there's a 10-year policy, as currently the way it's set up, the chairman would stay on the board for 27 years. And so we have a significant issue with that.
It is a stock that has done tremendously well over that period of time, though it has stumbled recently. Given that long-term track record, why take issue with the tenure of some of those members that oversaw that tremendous pace of growth?
Well, the problem is that when you say the tremendous pace of growth, growth does not necessarily translate in shareholder value creation. If you actually look at the stock performance, and we highlighted that in our letters, if you look at the stock performance of Parkland versus its peers over the last 1, 3, 5, and 10 years, you can see staggering underperformance. Early in its years, the company may have done well, but no, for a very, very long time, the company has been underperforming.
You own about 2% of the company, and I was speaking to representatives who work on the Parkland file on the other side of your campaign. And they said kind of flippantly, I asked, what should I ask you, Arnaud? And they said kind of flippantly, why are you engaging in a battle that you can't win, just based on the shares that you own, the support that you have versus the support that Parkland has? What's your answer to that?
My answer to that is that, our influence at Parkland or at any other companies, our influence is only as good as the support we get from other shareholders. And so whether we own 2%, 5%, or 10%, what matter here is how much support we are getting from other shareholders. And I can tell you, we are getting a tremendous amount of support from other shareholders. Since going public a month ago, we have spoken with many shareholders, and just there's an incredible amount of frustration, which is not surprising again when you look at the 10-year track record of the company. So the idea that a fight can't be won here is simply not correct.
Well, maybe you can put some context around that. When you say a tremendous amount of shareholders, you're up against, I assume, a shareholder in Simpson that is very favorably predisposed to Parkland's strategy. They have 19%. Do you have an estimation of what percent of shareholders you've spoken with that are on side with your campaign?
Look, this year we are withholding support on all the directors. We will see, we'll see how many other shareholders do that. And I think the set is stage for next year annual meeting, depending how the company does. If the company does great over the next year, great, everyone will be, will be happy, including ourselves. And if the company continue to underperform, I think some shareholders who are still potentially supportive with the company may revisit next year. So we are long-term investors, and this is the first annual meeting, and so we will see over time how it unfolds. But I would say there is frustration, and I would also tell you that and again I won't speak for the Simpson family, obviously, but as part of the agreement that they had, they could already have put people on the board years ago, and they never did. The fact that they finally at this point decided that they wanted board representation, to me speaks more to frustration that they have with the company than potentially support for the company. So again, we will see how it unfolds over the following months and years. But I would just say that when you look at the chart and the performance for the last 10 years, I would say logically, you would think that there would be a lot of frustration from shareholders.
You've agitated for things, as we've mentioned, like selling those non-core parts of the business. Failing that, you think there should be an exploration of a wholesale sale of the company. Do you think that there are buyers here, either on the private equity side or the strategic side? Would like a Couche-Tard make sense in swallowing up a Parkland, which ironically used to be called kind of baby Couche-Tard?
Yeah, I mean, it is a baby Couche-Tard, except that, again, if you look at the 10-year performance, Couche-Tard has actually, outperformed Parkland by a very, very wide gap. So, in the letter, we talk about the fact that we believe that what the company needs to do is what we say, what we call either you simplify the business or you sell the business. So either you simplify by selling or by spinning off some of these non-core assets, or yes, you should go and try to find a buyer, because the complexity of the business make it a bad candidate to be a public company. As for potential buyers, look, we think that these are good assets. We think that whether it's private equity, whether it's competitors, whether it's potentially other players in the fuel value chain, we believe they are buyers. Specifically on Couche-Tard, which you mentioned, I don't believe that Couche-Tard would be able to buy Parkland just from a competitive point of view. I believe that would be very unlikely.
You've said the stock could be a $45 stock, somewhere it has been in the past, albeit briefly. Is that under a simplified scenario or under a sales scenario?
No, actually, the 45 is under a standalone scenario where they actually, get the right multiple that they deserve for the convenience store retailer. So we apply a regular, public market multiple for those assets, and that's how we get to 45. Including the cash flow that's being generated by the company. So, I think in a sale, potentially they could get even a higher price.
And lastly, you've said you're here for the long term. You're not flash in the pan looking for a quick turnaround and to make a quick buck. Does that mean you'd be looking to increase your stake, accumulate shares, and be involved for a year, 2 years, even longer to turn things around at Parkland?
Absolutely. We are, while activism is what, grab people's attention, at Engine, we are long-term value investors. We are often passively investing in companies also. So absolutely, we think this is a good business trading way too cheaply. And, we are trying to highlight issues and provide recommendation that we think would create shareholder value. But yes, we intend to be there certainly for the foreseeable future.
Would you want a board seat?
Look, everything is up for discussion. Look, in general, we are big believer in shareholder representation, and frankly, we were very we viewed positively the fact that they put they took 2 board members from the Simpson family. We think it's important to put shareholders in the boardroom, so that's certainly a step in the right direction.
All right.